Welcome to the channel. Here, we provide clear, actionable insights into the complex world of tax and accounting to help your business thrive.
You know, it's wild, but a ton of businesses leave free money on the table every single year. It's not a mistake, really. It's just an oversight. They're overlooking the sheer power of U.S. business tax credits. So in the next few minutes, we're going to show you exactly where that money is and how you can get your hands on it. So I've got a serious question for every business owner out there. Are you? Because tax credits, they're not just some boring line item deduction. They are direct financial rewards from the government for stuff you might already be doing. They get overlooked so often. But today, we're going to make sure that's not you. Okay, this right here is the single most important thing to get. A tax deduction just lowers your taxable income a little bit. But a tax credit, that's a direct dollar-for-dollar reduction of your final tax bill. It's pretty much the closest thing to the government handing you cash that you're ever going to find in the tax code. So here's our game plan. We'll start with the basics. Then we'll dive into some really powerful credits for investing in your future and growing your team. And I mean it. Pay very close attention to Section 4. We've got some absolutely critical updates that have completely changed the game in the last year. Then we'll touch on state-level opportunities before we wrap it all up with your key takeaways. All right, let's lay the foundation. So what are these things, really? Business credits are basically the government's way of saying, hey, do more of this. They want to encourage things like innovation, switching to green energy, and hiring inclusively. Just think of it like a partnership, where your smart business decisions can lead to some serious financial rewards. Next up, let's look at how the government rewards you for thinking long-term. These credits, they're all about encouraging businesses like yours to invest in the future, especially when it comes to innovation and clean, sustainable energy. The Inflation Reduction Act, you've probably heard it called the IRA, was a complete game changer. Seriously, it didn't just tweak the rules a little, it massively expanded the credits that were already there, pouring a historic amount of money into clean energy and American manufacturing. This has opened up some huge opportunities for all kinds of businesses. And this slide boils it down pretty simply. Think of it this way. The Investment Tax Credit, or ITC, rewards you for the build-out. You know, the upfront cost of buying all the new equipment and facilities. Then, the Production Tax Credit, or PTC, rewards you for the output, the actual energy you create. Oh, and that AM you see? That stands for Advanced Manufacturing, which is huge because it extends these credits to the entire supply chain, not just the company at the very end. Okay, let's shift gears to another really powerful investment tool, the Research and Development Tax Credit. And right off the bat, I want to bust a huge myth. This is not just for tech giants or scientists in lab coats. The definition of R&D for tax purposes is way, way broader than you'd probably think. And to qualify, you basically have to pass this 4-part test. First, your project needs a permitted purpose, like making a product better. But here's the real key. You have to be trying to eliminate technical uncertainty. If you already know exactly how it's going to turn out, it's not R&D. You have to show that you're using a real process of experimentation, and it all has to be based on science or engineering principles. And check this out. Here's a perfect real-world example. Trying to make a cell phone case that absorbs shock better? Well, that involves trying out different materials, fiddling with the design. That's a process of experimentation to eliminate technical uncertainty. It just goes to show how everyday product development can actually qualify for a pretty significant tax credit. Now let's talk about getting rewarded for who you hire. The Work Opportunity Tax Credit, or WOTC, is all about giving businesses an incentive to hire people from specific groups who've had a tough time finding jobs in the past. The program is really focused on bringing certain people into the workforce. We're talking military veterans, folks who've been incarcerated, people getting certain kinds of government assistance, and even residents of specific economically challenged areas. It's a total win-win. Your business gets a tax credit, and someone gets a fantastic career opportunity. And the money here is no joke. You can claim a credit of up to $9,600 per eligible employee. And the best part? The program just got extended through the end of 2025, so this is a very active and very valuable tool for any business that's hiring right now. Okay, I need everyone to lean in for this next section. Seriously, the landscape for 2 of the biggest tax programs has changed dramatically. What was true a year ago is not true today, and you absolutely have to know the difference. First up, the Employee Retention Credit, or ERC. This thing was an absolute lifeline for so many businesses during the pandemic, right? It rewarded them for keeping people on payroll. For a while, it was one of the most generous credits you could find. But things have changed. A lot. So here's the bottom line. The old advice to hurry up and apply, it's now dangerously outdated. In September of 2023, the IRS was hit with a tidal wave of fraudulent applications, and they basically slammed on the brakes. They have stopped processing all new claims. So for all practical purposes, the door is closed for new ERC applications. Okay, after that bit of bad news on the ERC, let's pivot to some incredibly good news. And this affects a lot of the same innovative businesses. We're not talking about the R&D credit we just discussed, but about how you deduct your R&D expenses. And this right here is such a huge win for businesses. There was this really unpopular rule that forced companies to spread out their R&D expense deductions over 5 long years. It was a major headache for cash flow. But new legislation completely reversed it. Not only is the 100% immediate deduction back, it's also retroactive to 2022. That means you can actually go back and amend past tax returns and potentially get a pretty significant refund. Now, while all the federal credits get the big headlines, please don't make the mistake of ignoring what's going on at the state and local level. A lot of states offer their own really robust incentives that can be just as valuable. And they come in all shapes and sizes. You've got Georgia with a powerful job creation credit. Alabama gives you incentives for major capital investments. Texas has both an enterprise zone program and its own state-level R&D credit. The big takeaway here is that you can often stack a state credit right on top of a federal one, which can turn a pretty good deal into an absolutely unbeatable one. Whew, we've covered a lot of ground, from massive federal programs to those critical updates and state-level goodies. So let's just boil this all down into the most important points you need to remember as you walk away from this. Here is your action plan, your cheat sheet. Number 1, look into the IRA and R&D credits to fund your innovation. 2, use the WOTC to build an amazing, diverse team and get rewarded for it. 3, and this is the big one, note that the ERC door is closed for new applicants. 4, talk to your tax advisor immediately about the retroactive R&D expense deduction. It could seriously mean cash back in your pocket. And finally, number 5, always investigate your local and state-level incentives. So I want to leave you with this final thought. Tax credits aren't really just about saving money. They are a map. They're a clear signal of the government's economic priorities. If you understand them, you can align your own business strategy with these powerful currents, fueling your growth while also helping achieve some bigger economic goals. So the only question left is, where is the map pointing for you?